If you're like most people, you were shocked, disillusioned, and outraged when you learned about Enron Corp's meteoric rise and fall. Remember the company's recent television commercial, which ended with the reverberating phrase, "Ask why, why?" That is the question on everyone's mind right now. Welcome to our channel, Front State Finance, and in this video, we'll see the rise and fall of Enron. In some ways, it's simple. In other ways, it's not. On the surface, the motivations and attitudes that led to Enron's eventual demise appear straightforward: individual and collective greed born in an atmosphere of market euphoria and corporate arrogance. Nobody wanted to believe the company was too good to be true. Not the company, its employees, analysts, or individual investors. So for a while, almost no one did. Many people continued to buy the stock, the corporate mantra, and the dream. Meanwhile, the company engaged in a number of high-risk transactions, some of which fell outside of the company's standard asset risk control process. Money turned sour in the early months of 2001 when Enron's stock price and debt rating plummeted as a result of investor and creditor distrust. The methods used by the company to disclose its complicated financial dealings were incorrect and, in the opinion of some, downright deceptive. The company's failure to report its financial affairs transparently, followed by financial restatements revealing billions of dollars in omitted liabilities and losses, all contributed to its demise. The whole thing took place under the watchful eye of Arthur Andersen LLP, which had a full floor of auditors assigned to Enron all year. Everything comes crashing down. Lay announced his retirement in February 2001 and named Skilling president and CEO of Enron. Skilling held the company's annual analyst conference in February, boasting that the stock should be trading at around $126 per share. Enron and Blockbuster announced the cancellation of their video-on-demand agreement in March. By that point, the stock had dropped to the mid-negative $60. Throughout the spring and summer, Enron's risky deals and underperforming investments of various kinds began to unravel, resulting in a massive cash shortfall. Senior management, which had been voting with their feet since August 2000, selling Enron stock during a bull market, continued to exit, taking hundreds of millions of dollars with them. Skilling resigned on August 14, just 6 months after being named CEO, citing personal reasons. The stock price fell below $40 that week, and with the exception of a brief recovery in early October following the sale of Portland General, continued to fall to below $30 per share. In an internal memo to Lay in August, Sharon Watkins, a company vice president, expressed concerns about the lack of disclosure of the substance of Fasto's related party transactions. She ended the memo by expressing concern that the company would implode under a series of accounting scandals. Lay notified the company's lawyers, Vincent and Elkins, as well as the audit partner at Enron's auditing firm, Arthur Andersen LLP, so that the matter could be thoroughly investigated. Enron's proverbial ship had hit the iceberg that would eventually sink it. Enron announced its first quarterly loss in more than 4 years on October 16th after taking $1 billion in charges on underperforming businesses. The company terminated the Raptor hedging arrangements, which would have resulted in the company issuing 58 million Enron shares to offset the company's private equity losses, significantly diluting earnings. It also disclosed the reversal of a $1.2 billion asset and equity entry made as a result of dealings with these arrangements. This disclosure drew the attention of the SEC. On October 17, the company announced that it had changed the plan administrators for its employees' 401k pension plan, effectively locking their investments for 30 days and preventing employees from selling Enron stock. According to the company, this decision was made months ago. Whatever the case may be, the timing of the decision has certainly raised eyebrows. Enron announced on October 22 that the SEC was investigating related party transactions between Enron and the partnerships owned by Fasto, who was fired 2 days later. On November 30, the stock closed at an incredible 26 cents per share. On December 2, the company filed for bankruptcy. The human factor. The Enron scandal claimed many lives, the most tragic of which was a former vice chairman of the company who committed suicide ostensibly as a result of his role in the scandal. Another 4,500 people have had their careers cut short due to the reckless actions of a few. The core values of Enron, such as respect, integrity, communication, and excellence, stand in satirical contrast to the allegations that have recently surfaced. Other former students who are still employed by Enron face an uncertain future as the company struggles for survival. And with that being said, it's time to end our video. Have you heard about Enron? Let us know in the comments. Like this video and make sure to subscribe to the channel for more amazing videos like this. We'll see you in the next video.